So once we've marked off our support resistance zones, we want to now refine our support resistance zones for scalping purposes. Remember, for scalping, we want to be as accurate as possible. We're using very small stops, and our entry is absolutely critical when we're looking to trade small bounces off levels. So we'll just step this forward in this example, and you can see in this example we've had a nice rally in price. You see our price stalled briefly and then continued up. I've marked this area right here. You see this red candle? I've marked this as a reference. So I'm referencing the last bearish candle before price started to rally. Okay, when price approaches this area again. So if price starts to retrace, this is the area that I want to look at placing an order to go long at. Okay, so we just step this forward. Here again, you see our price breaks away, and I'm drawing a line, horizontal line, across the body of the last bullish candle before price broke away. So here again, reference the last bullish candle before price started to drop when price approaches the highs again. So if price starts to retrace, I want to start referencing this bullish candle here. That's where the institutional flows come in. So it's at this area here and this area here. So we're fine-tuning or refining our larger zones to very, very specific levels. And it's at this area right here that I'm looking to buy. So price comes down and I want to look to enter on a limit order. So the same as with the patterns that we discussed in the previous section. We want to look for price to come down, and here we can have the limit order in the market. The stop loss will go just below this last bearish candle in this case. So a very, very tight stop loss, and we're looking for a quick reaction, a quick bounce off this area. Remember, when we're playing these levels, we're looking for little bounces. Now, these levels are hourly or 4-hour levels, and a bounce like that can be worth a quick 10 or 20 pips. Once again, once price starts to release, we want to reference the last bearish candle before price started to rally when price approaches the level again. So you see how we've referenced this bearish candle right here, drawn a horizontal level or line across that area, and what we're looking for is we're looking for price to come back and tag this candle right here. So I'm looking to buy once again with a limit order, and price comes back to this area. So that's the retest. You want to have your limit order waiting and ready, and you're looking for, once again, you're looking for a little pop off this area, a little bounce. Okay, so we paid, that will be whatever the time frame is. This could be 10, 15, 20 pips. Price comes down. Now, you can look to trade this level again, but what you're very often going to find is when price comes back to an area like this for a second time, it's not as reliable. So you'll see price normally comes deeper, it runs these lows, picks up more order flow, more orders stacked below this area. You can look to trade it. But if you want to trade it, I would just reduce the risk. So if you, let's just say for argument's sake, you're trading a one standard lot, may even reduce it to half the size. Okay, I personally don't like to do that. I normally just like to take the first time back to those areas. So once price breaks, the first time it comes back to that area, that's where I'd look to trade it. So once again, releases, I'd reference the first time back to the area and look to play that bounce. And when price releases and it closes, remember we spoke about candle closes in our in one of the sections. Here again, we get a big release up. We want to reference the last bearish candle before price started to rally. Okay, when price approaches that area again. So once again, we can just mark that level off, and I'm looking to place a buy limit order if price comes back to this area, to play a little bounce off this bearish candle. This is the order block, or the institutional flows sitting here. This is where you want to look to place your scalp. Okay, so we're looking to a buy on a retest. So So as price comes down, this is where you want to get involved. Okay. Now when playing these trades, the stop loss goes below this last bearish candle. So in this case, with this retest, stop loss would go below here. On this retest, the stop loss, if this is a very large candle, then you may want to either pass on the trade or reduce the risk perhaps, or go to the smaller time frames to try and find another area in and around this level. Okay, so in this case, this may be too large a risk for this red candle here to put a stop below the low. Here again, you're looking for that little pop up. Okay, and you can play these from support to resistance, or you could just look for that quick bounce. Okay, so that 10, 15, 20 pip bounce. Everyone's going to do it a little bit differently. Here again, you see how price closes. We had a candle close above the range, so you just mark that off, and here again we reference this last bearish candle. Okay, nice area of potential support. We'll reference this last bearish candle, and this is where we look to place a buy limit order. Okay, so now price is starting to move up. Remember, we want to reference this last bullish candle before price broke to the downside. Okay, so I want to reference this area. Entry would go here. Stop loss above this candle here. And we're looking to sell. So price rallies, pops up, and you get a nice reaction. And again, if you're scalping and you get good at this, you can play level to level. So you can play, for example, you could play a bounce from one area to the next. Support into resistance, support into resistance. It doesn't always work. Okay, nothing does. So remember, we play probabilities as we showed you in section 1. But you have a very high hit rate. If you get good at this, you can normally get around 70-80% hit rate. It does take a bit of practice, and as I said, the important thing here is a very tight spread. Okay, and you can see price comes down. We reference the last bearish candle, and we get a very nice reaction. Okay, so that's essentially how I look to scalp. Once we have a nice move up, I start referencing in case of an up move, start referencing the last bearish candle. That's where the institutional flows come in. And in the case of a down move, reference the last bullish candle to place that trade at.